Oh, hello everyone, and thank you for coming along today to join us for this webinar. Apologies, I was waiting for David to start and he was waiting for me to start. So between the two of us, we managed to completely make a complete mess of starting the webinar. So I do apologise. As I said, thank you so much for taking the time out to join us today. We're going to be looking at, well, certainly what's going on generally in the markets. I've got some currency futures. I don't know what David's got, but I think I'm sure he'll have something interesting for you to have a look at. But in the meantime, before we start, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business, so please don't ever think of using money that you cannot afford to lose. And as always, just very quickly, for those who, because I've looked down and I can see we have some new people join us today, we're going to be looking at the markets, the charts, through the prism of what we call volume price analysis. And it is reading the chart, not just the price action and doing a price analysis based on candles and candle patterns, but looking at the volume. Basically what we're looking for is whether what we're seeing on the chart, is it an anomaly? Is it a genuine price move? Because ultimately volume is really the only indicator that can validate what you are seeing on the chart. And I'm going to give you a really nice example of that. It's one of our students left us a little message, and you know, how, as I said, he's a great price action trader, very you know, good on price analysis, using support and resistance. He actually uses Fibonacci as his go-to method for SNR, but you know, and price reached a certain level. I don't know what fib level it was, but you know, whether it was going to carry on or what have you. But essentially what happened was, with price analysis alone, he would have been a little bit hesitant about taking the trade to the long side once the price had reached this particular level. But because what he had seen by bringing the volume in and looking at the down candles, he could see the price was moving lower, but the volume was diminishing. It was disappearing. So what does that tell you? It was an anomaly, and that gave him a little bit of extra confidence to take the trade. And what we've done is, so that to help explain, to see more examples of what we mean by VPA, because this book really just explains, it's the kind of, you know, the concepts behind the methodology, which, by the way, is not a new methodology. And I'll tell you a little bit about that, because in this lockdown period, David and I have been, you know, confined to our home, which is, for us, we have the luxury, we live in the most beautiful part of the world. You know, I can't say that it's been a terrible time, other than we haven't been able to see our grandchildren and our daughter as often as we would like. And, you know, please God, Christmas is not going to be cancelled, because I think we will be very, very, very distraught, as will the children. But we will have to see. The world is what it is at the moment. And what I've actually been doing, I've been studying, I've been looking at doing some historical research into a bit more depth of the great traders of the past. I've got some of Livermore's stuff, I've certainly got Richard Wyckoff's stuff, but I've also been looking much more closely at W.D. Gann, because I mentioned Gann before, and we've you know, we refer to the Gann angles, and some of you may know the square of 9, some of you may even use his astrological approach. But to get back to you know, what he wrote at the time, this is back in the 20s, he too talked about campaigns, and he talked about volume of sales. So using volume to kind of validate what was going on the chart. And it also highlights that what we're looking at, what we do, it's not new. It's been around for, well, over, you know, some considerable time, trading, you know, trading and investing. What's new is the fact that a lot more people can have access to these markets. It's very easy to have access. We could say it's also very easy to lose money very, very quickly. But if you are prepared to consider the use of volume as this this indicator that will confirm for you and validate what you're seeing on the chart. It's fantastic because you can use it in combination with whatever other approach you have. As I said, you might use Gann angles, you might use Fibonacci, you might use moving averages, and in what I've been researching and what I've been thinking of, when I've been reading about and learning, because as I said, you can never stop learning in this business, it's given me some ideas, because in this example, the example book that we put together to go with the volume price analysis book, you just have a bare chart. You see 200 worked examples of VPA in action across different time frames, across different markets. But obviously, we all use different indicators. We have proprietary software that we've developed as resulting from our VPA studies. I know some of you who have joined us today are quantum trading users. Some of you have the full package. Some of you just have one or two of the indicators. But what actually got me thinking, and maybe it's something we can look at a little bit more detail when we start this new series of webinars next year, because this is the last for this year and it's the last of this series. So we have to thank you from the bottom of our hearts for taking the time out of your day to come and join us and listen to us. I hope you've learned something. We've certainly enjoyed doing them. We've had some lovely comments on YouTube. I have emails, and by the way, if you've emailed me and you've not heard from me, please, I think I have been deluged this year with emails, and I am still working my way through. And I have to say, I do also get quite a lot of emails from the penal system in America, because the books are available to people who are currently serving time in prison as improvement. Everyone who has written to me is determined to turn their life around, and they hope to do that. They're learning, and one of the things they are learning is how the markets work. And I'm very humbled, and I wish them all all the success in the world. Right. So one of the things we've been talking about is basically how you incorporate all these other approaches, all these other methodologies, if you like, because it is possible. Elliott wave, Gann angles, it doesn't really matter. Fibonacci, moving averages, the MACD, as long as you understand what these approaches and what these indicators are doing and apply them correctly to the price cycle, and then use the volume to actually validate the decision that you want to take, I can guarantee you your trading and investing will improve exponentially. So just to complete, if you like, the picture of a VPA, as I said, we have the price action, we have volume, we use candles, we have students who use bars. It doesn't really matter. We have candles, we have the patterns, and this is the one. This is the SNR. How is this determined on your chart? How do you mark that? As I said, we have developed very particular indicators, both for the MT4 platform, MT5, TradingView, and also NinjaTrader, and now TradeStation. On NinjaTrader and TradeStation, we actually call it the Accumulation and Distribution Indicator, and it is a fantastic indicator. And when price approaches one of these levels, the indicator gives you so much information about what you can expect next. And we've also developed something called a Camarilla indicator, which gives kind of hierarchy to these levels, much like Fibonacci does. Fibonacci, there are certain levels which carry more weight, if you like, when you are carrying out an analysis. Right, so that's my little bit about volume. Those of you who were with us a couple of weeks ago will recall that I told you to take notes, so I hope you did. And I said we were coming up to a whole series of significant dates as we move into the end of the year. Well, yesterday was one of those significant dates. It was the 14th. And obviously, we now know that the Biden presidency has been confirmed by the Electoral College in the States. So there we are. It's the transition will now complete. Mr. Trump he's still there, you know, well, we'll set that argument, that discussion aside, but essentially that is what is going to happen come January for the inauguration. It's obviously there's still a lot of rancor and happiness. There's all our societies are very divided at the moment, and that's all we can hope for 2021 is that the world becomes a more sane kind of place, as it were. But I also said there were 2 other dates. One of them is the FOMC. So very quickly, that is tomorrow. A quick look at the calendar as we have here. And I also said at the time, depending on the result of the elections, we now pretty well, I think it's a foregone conclusion now with Biden that the Treasury Secretary is now going to be Janet Yellen, obviously the ex-chair of the Federal Reserve. She obviously knows Powell very, very well. What does that mean? That's also going to have implications for maybe what the Fed is going to say tomorrow in terms of more what they call stimulus, you know, lots of money. Where is this cheap money going to? Well, so far it has been going into the stock market, and you know, are the markets going to go ever higher? We've also got ongoing discussions with regard to stimulus. Those of you who in the States would know, but that's obviously going to have having an effect on the markets at the moment. The YM futures are up. They still can't seem to settle. That 30,000 level is still the key level for the YM. The Nasdaq, what do we have here? Well, that's up very, very nicely as well. So, you know, I know the virus is still nowhere near under control, but, you know, with vaccine coming along, Biden being, you know, confirmed, if you like, as much of the certainty certainly surrounding the presidency, that has now been removed, if you like. So that's one thing the market can now sort of put aside and, you know, move on to other things, as it were. But there was one other factor that I mentioned of those of you who came along, and that is, this is the week that Tesla goes into the S&P 500, and I'm going to put this link in at the bottom because I really, really want you to read it. And there's so much information in this article, not just about Tesla and the potential implication on Friday, how the markets are going to close, because it's part and parcel of what they call rebalancing. It goes on all the indices, and some indices are done 4 times a year. It's basically when companies are taken out of an index and others are put in. And you have to remember about an index. An index is used by the media as a shorthand for market sentiment. We use it as a shorthand. So when we look at the YM, and which is based on the Dow, there's only 30 stocks in the Dow. A little while ago, ExxonMobil was removed from the Dow. Salesforce was, was included into the Dow. And the media use the Dow. Oh, the Dow's up 200 points today. Oh, the Dow's down 200 points. Or the Nasdaq is up. And it's a shorthand for sentiment. But you have to see behind that shorthand, because there's all sorts of things going on with the indices. Yes, they are a shorthand for this sentiment. But if you are a day trader, particularly with stocks, and this is something we're going to talk about more next year, particularly when we have TradeStation up and running, and that is, you have to be a little bit more aware of, what are the companies making up the indices? What are the sectors? When is the next rebalancing coming up? And because so many investors now are passive investors, they just buy an index, and and that's it. They don't bother with individual stocks, as it were. When you have one of these rotations, as is going to be the case with Tesla, it can really shake the foundations of the price action and what is going on. So Friday is a really, really big day. Now, this article also explains the S&P is done 4 times a year. The Russell 1000 and the Russell 2000 is only done once a year. So whether you trade stocks, whether you trade an index, This is the kind of information that you really, really do have to sort of know and, you know, keep it somewhere, and it's these dates that you have to be aware of. It's like quadruple witching day as well. You know, what's going on in the options market. This is something else we'll be talking about, because the options market was always a derivative of the cash market, but this year it seems to have been, it's been inverted. The cash markets, part of the drivers for the cash market has actually come from the options market. So if you like, day trading has become so much more than simply looking at a chart, perhaps being aware of some fundamental news, perhaps being aware, you know, oh yeah, it's the FOMC tomorrow. What is the politics? You know, what's going on with the central banks, etc., etc. It's become a much more complex activity, as it were, and this is one of these complexities that you really, as I said, I genuinely think you have to know what is going on. And as it says here, Tesla will be the biggest rebalance in history, and what it will mean, as I said, purely because of the, you know, people who buy the index as a whole. You know, what is it, 80 billion of Tesla to include. That means we'll have to sell 80 billion of the remaining stocks in the S&P 500. It's called rebalancing for a reason. So there we are. So it really, this week is, as I said, started brightly yesterday, went off a bit in the afternoon, but at least the election has been resolved. We now wait for the Fed tomorrow, and then, as I said, then we have what happens with Tesla on Friday, and then obviously next week, I think we've got Sundays trading tomorrow, next week, haven't we, David? Yeah. But normally, you know, the volumes will start to fall, and I think this Friday will really, I believe, mark the end, if you like. This is it. This is 2020. Tesla's in the S&P. Everyone will be looking forward to what is going to be happening in 2021. Right, very quickly, before we move it over to David, I've been, last week I said, I'm looking at currency futures for cable. It's all been a bit desultory at the moment. We've both been having problems with Ninja today. Oh, here we are. Oh, it is moving, but not very much. The currency futures or the spot market is exactly the same approach with volume price analysis. We read the volume at the bottom. In fact, with our indicators, as I explained earlier, we actually read volume, not just the volume here, that we analyze it in conjunction with the price action above. We also look at, excuse me, hold on a second. I've remembered to turn my microphone on. It happened to David this morning. He started to cough, turned his microphone off, and then forgot to turn it on again. Oh dear, that happens. Oh dear, it shows that we are definitely at the end of the year. We are definitely need some time away from our charts. Anyway, volume, yes. Volume price analysis, we look at the relationship between what we're seeing in terms of price action and the volume that we see down here. Support and resistance, how do we measure the support and resistance, for better or for worse? Well, this is the accumulation and distribution indicator. This is what I meant by the lines. You can see the lines thicken every time a level is touched, and the thicker it becomes, the stronger that line then becomes. You can see here they start out very, very thin. My Camarilla levels here, very similar to Fibonacci. These are key levels. There are actually 6 levels with this indicator, although most people who use Camarilla only use 4. If I just shrink that down, you can see that at the moment. But not it, and this is all price-based support and resistance, but we also have volume-based support and resistance. Is volume price over time, and it's kind of based on volume at price. So what you see here is you hear these sort of bulges. across in this histogram here. This is what we call a high volume node. This is a low volume node, and that basically means when it's a high volume node, the price is been in this region the longest. Why? Because we also have something called the volume point of control. And when I see price at the volume point of control, I know immediately that it's going sideways, as we can see here on the 10-minute chart. And basically, I am waiting for a break either to the upside or down to the downside. What these nodes also tell me, this is volume-based support and resistance, is when I have a low volume node here, if that price, if the 6B actually manages to get through and break lower, it will go through this fairly quickly, because whilst I have price-based support in terms of the R2 of the Camarilla, in terms of volume support, it's very thin. It's certainly not as thick as it is above. What this also tells me is that if it's going to move higher and target the outer limits of the volume-based resistance, which I can see here, marked by this this line here, it's going to struggle, and the only way it's going to move through there is I'm going to have to see, you know, a pickup in the activity and the volume at the bottom that I see. So at the moment, this really isn't, you know, it's really not going anywhere for what I want to do. So what I've imported over from our spot market indicators that you can use on the currency futures as well. This is our currency strength indicator. And I've actually taken out all the other currencies, because all I'm interested is in the British pound against the US dollar. And certainly on the 3-minute chart, I can see that the British pound is trying to move higher. That was the 10-minute chart. If I move it up to the 10-minute chart, let's see what's happening there. Well, this kind of tells me why I'm kind of moving sideways, because we can see these two lines, they've been moving in the same direction. I'm now beginning to see a little tick up with the British pound, but given what I have over here on the chart with the volume resistance, if you like, this density of volume, I know it's going to need a little bit more oomph, and I'm going to have to see an increase in volume down here. So that's using volume, not just with price action, but looking at volume, using it as support and resistance as well. So as I said, I'm going to keep an eye on the British pound, and of course on the 6B, and of course we looked at a calendar earlier. And I really, as I said, this is whatever you trade, you really, by all means, whatever calendar you have, you really have to invest or, find a way of finding a news feed somewhere, because all the markets, they're all interrelated. You really do need to know what is going on out there that is likely to impact what you are trying to trade. And as I said, the impacts are multiple. There's the virus, the vaccine, the politics, the fundamental news. And as I said, this is the one that I use. It's from Financial Juice. There is a free version, but it's very, very slightly delayed. But even the paid version of all the news feeds that are out there for independent traders, this is certainly one of the most competitively priced. I mean, you can pay a fortune for Reuters, Bloomberg, etc. But maybe hopefully one day when you are all hugely successful, that is what you can aim for. But certainly this does absolutely fine for what is going on literally on a minute and second by second basis. And I really like to know, what Amar, the guy who runs this, we kind of know what he's done here. His guys sort of update, well, what are the highlights, if you like, because everyone comes to trading at different times. You open your system. I said, well, what's been happening? What's going on? You know, what's sentiment? What's been bought? What's been sold? So it just gives you a nice summary, if you like, of what is going on. Here we are, and as I said, this is the this is obviously the election. He's officially the president elect. There we are, and let's go and have a look and see what the indices are doing. Yeah, that's sort of ticking higher. Let's have a look at the Nasdaq. Yeah, that's come off a little bit, you know, but you know, it's everything, it's all the information we have to know. But to go back to the chart, volume at the end of the day is what will validate what you are seeing on your chart. So I'm going to wait for the 6B to see whether this is actually going to creep higher, and creep is the word that best describes it. Then the other thing about levels is they also act as potential objectives, targets for where this price is going to go, and it's certainly going to try and get to the R4 here. But the beautiful thing about this, marvelous thing about this indicator is the levels are different according to the different type. Hold on, I've lost that one. Hold on, there we are. Let's draw that. Let's pull that over a minute. Move that over there. Here we are. The levels calculated up to but not including the hour are refreshed on a 24-hour basis, but these levels that you hear on the 60-minute up to the daily chart are refreshed these are levels that are valid for the rest of the week. So what I'm waiting for here is that if this is going to go higher, it is certainly going to have another run at the R4. We can see here it's had 2 failures at the R4. Now you could say, well, it's had 2 failures there. You say, okay, maybe a third, chances are it's going to be a third failure. Do you, on the balance of probability, based on just the price analysis, would we think, you know, is that a good place possibly to take another short? Well, what will determine that is what we see down here in terms of volume. And what's interesting here is if you look at that volume bar underneath that candle, which is like a sort of, you know, upthrust shooting star, hit the R4, you would expect that to come off. Then it had another go at it, quite a wide up candle, again with a spike to the top, but look at the volume, not huge. If that was going to be a nice big up candle, we certainly wouldn't want that spike at the top, and you'd want it to go through, but the support and resistance level actually held it back, as it were. Then this volume under here, which was a down candle, you think, okay, just based on price, forget what we see down here. One attempt at fail, second attempt at fail, you see a down candle coming, you say, oh, well, on the balance of probability, just on the balance of probability, that's failed, that's failed. Oh, well, that's going to be a short then. Okay, well, I'll take a short. I'll go off that level, because the R4 often, very often, price doesn't go through, and you can use it to lean against and actually take the R4, certainly, you know, take a short. But look at the volume underneath it, and look at that candle. What does that tell you? Actually, you know, that's an anomaly. So the chances are, if you were going to take, that was a little down candle. I fully accept that, but that and that are really so far out of agreement. And what's happening now is going to have yet another run up to the R4, certainly on the hour, and what we have on the 10-minute chart. It's ironic. It is actually a different level on the R4 on the 10-minute. Believe me, it's much the R4 is much closer on. It's down here. The hourly version of the R4 is actually slightly lower down. And again, we need to see volume increase under there. And moving to our CSI, that's what we want to see. It's creeping higher, but at least they're going in the right direction. In other words, pound is moving higher, dollar is moving lower. You've got nice divergence. When you have these lines moving more or less in the same direction, it is telling us that we are in congestion. Right, I will now pass back to David. I'm not sure if I'm going to be speaking to you later. If I don't, I just want to thank you all, as I said, for having taken the time to join us for these sessions. As I said, thank you so much. I hope you've learned something. I hope we have helped you with your trading. If you've got any questions, either what you've heard in this session or anything that we've covered in the previous sessions, please do put them in the chat box. I'm going to put that link to that CNBC article about Tesla, because those of you who will be trading stocks this week or even the indices, it's really an important piece of information for you. I hope Christmas is a good time for us all this year, and I will be speaking to you again next year. So I'm just going to pass over to David, and I'm going to put the link in the chat box.
Hi everybody, very warm welcome. Sorry about that. I will try to remember to leave my microphone on this time. Thanks, darling. Let's get going. There is a lot of congestion and there are moves afoot, but it's very tentative at this stage. We start with the three indices, and I've also got Apple up on stocks because that itself has really been the sole driver, if you like, for all this spiky behavior up here on the NQ. And as you can see here on the YM, it is just starting to break down a little bit. The NQ, you can see on the daily here, it's tried to rally. As I say, most of that is really triggered by the news on Apple, which has been very positive. And that's really helped to lift it. But the actual tone at the moment is quite bearish. That was yesterday's candle. We've had the 4 straight days really of losses, give or take. And we're now looking at potentially breaking down again. And what appears to be happening right now is the YM is actually leading the way along with the ES, and they are kind of dragging the NQ down. As you can see here, it's starting to develop a bit now. The trend monitor here, as you can see, is bright red, which is fantastic, keeping us in. We had a little bit of a flip-flop here, but nothing major, and it's just continuing to flash. This is on 5-minute, by the way, so we've got the YM, NQ, and ES strung along the top here. So you're starting to see that now. This has been red for some time. This is now transitioning into red, and this transitions straight through into red on the ES. So it's quite a bearish move that's starting to build that sentiment. So let's just go over onto, and I'll go on, I've got to say, I've got Apple up on the stocks as well. Let's just go into this one. Here we are, I've got the YM here, and you can start to see it here. This is on 15-second, this is on a minute, this is on 3-minute, 5-minute, 10-minute, and 15-minute on the bottom right-hand side. Definitely tradable, definitely starting to develop. You can see here we've got the trend monitor. We transitioned through from away from the volume point of control. Very strong level of this ceiling of resistance. You can see it was hit there on the attempt to rally. Extremely strong level on the accumulation distribution indicator. Let's go up to the 1-minute. Similar sort of picture, starting to break away from the volume point of control. More levels in here. You can see another strong level in here. And the point I always make is that indeed, as I'm speaking, we only had 2 here. We've got one here that you can see here. It's underneath the VPOC histogram. We've got one here. You can see them better here. We've got the strong ceiling there. As you can see, it ran into that and bounced off. Then we've got this one here, this blue level. That was acting as support all through here at the time, and it's now been breached. Of course, it's now acting as resistance. Decent volume under that last candle. So say this is on a minute. Let's go up to the 3-minute and see what that looks like. Similar sort of thing. Lots of volatility, lots of efforts to rally, volume falling away, markets trying to rise. Trend monitors staying studiously bright red for us. Decent down candle. Decent volume under that. Bear in mind that you're always going to get, this is 14:30 our time, so 2:30 in the afternoon. This is a Globex only, so this is electronic, which may look difficult to trade, I can assure you, until this volume comes in at 2:30 our time. This is perfectly fine, it's perfectly demonstrable, it's perfectly tradable, it's perfectly usable with VPA. As soon as we get the surge in volume with the cash markets open, then we're all going to get this massive volume spikes. Then gradually, over this first hour or so, the volume will start to diminish. It's what you expect. It is natural that you get a big surge up this end, and then gradually it starts to tail away and settle down into a more normal pattern. So looking at that particular candle, I would say on balance, it probably looks a little bit lightweight in terms of volume. I'd expect to see maybe heavier volume in there, but for the time being, it doesn't look too bad. Let's go up 125. There we go, similar sort of picture. We've come down into this low volume area on the VPOT, which is very important. It means that there's very little in the way of volume-based support there to offer anything in the way of support to the move. So from a price-based perspective, we're looking at this on the accumulation distribution, which has already been breached, and it's not particularly strong either. If there was something like this one up here, this very strong level, very thick, what the indicator does, it actually delivers this. It's a visual representation of strength, if you like, because every line is printed wider depending on how many times it's been tested. You may not be able to see it over here, but this is 12. So this has been tested numerous times and held, and therefore gains strength. This one is less strong because it's less thick. So you get an instant appreciation of these various levels of strength and weakness. It's not just simply a question of drawing a line across and saying, well, that's kind of the level, or here's a vague area. These are absolute pinpoint precise, and they act accordingly. Just go up onto the 15-minute. We had a volatility trigger there. No surprise to see the price action moving it back inside the spread of that candle. I've got the Camarilla on here, so we're moving away from we're moving down into R1. We're moving towards possibly the S1, R1, S1 buffer zone in here. We've come right the way down. We didn't quite get up to R4 over here. We're not far off it. Now we're coming back down into the congestion buffer zone in the center there of the Camarilla. That's on 15. I'm just going to have a quick look at Apple on the stocks, because this is what really drove the move on the Nasdaq, and it gives you an idea of how potent a stock such as this is. What time frame is this? This is 5 minutes. That'll do. Let's pop that one up full size. There we go. And you may not be able to see it here, but this was the pre-market through here. This is 1 o'clock UK time. The pre-market opens. We had this big spike up. There is volume here. It's obviously very small in terms of the pre-market volume per se, but that's the price action that was associated. So we had a big gap up from the overnight, big gap up into this move. Then we had the explosion of volume, and on up we go. And now we're starting to see that roll over, and that is part of the reason why the Nasdaq is under pressure now, because that euphoria over Apple is now starting to drain away a little bit, and because Apple and the other FANGs, if you like, are so dominant within that particular index, they have this huge impact. So you've got to be well aware, either from an intraday day trading perspective, because they are very liquid and very tradable. Obviously, in intraday, you get all the pre-market and very tradable on the market, but they are also very dominant in the way that they pull and shove the index itself around out of balance with their proportion assigned to the index itself. So that is part of the reason that we're starting to see that. And obviously, if you're trading short, if you're short the NQ and you've got some of these big stocks which are negative, then that's what you want to see, because they are going to help to drive the index itself. We've got all the various time frames up and down, as you would expect. This is up on the 10-minute. We had the volatility trigger there into congestion, another one here, ton of volume as the market opens up. It's what you expect, followed by a further one. But the key there is the amount of volume that went in, almost the same as this one. Not even, well, maybe a half, I suppose, being generous, a half the spread for what, 90% of the volume. So even based on that, even without the volatility trigger, that would have given you a heads up that perhaps this euphoria over Apple, which has seen it rise from what just under 122 to almost 127, that's starting to come off. A lot of day traders are in there, be taking profits anyway and closing out. And we're also trading around the volume point of control. We're starting to break away from that volume under here. We've got weakness here, effort to rally, so on and so forth. Maybe a little bit of buying coming back into the market now. See how all that's shaping up on the indices themselves. So this is on the YM. In fact, let me go back to the multiples. There we go. Let's go back over here. It's not, it's not strong. It's not a move that is smooth. We're not seeing a nice price waterfall of 6, 7, 8 candles continuously breaking lower. It's just a sentiment that is. You can see the daily here. This is what we're trading in. It's pretty narrow stuff. And if you want to trade in these markets in these sorts of compressed congestion phases, then it's a question of going down to the faster time frames always. We'll go down onto the 15-second, one of my favorite, perfectly tradable. If you're comfortable trading those sorts of reversals, you've got it here. You can see the trend monitor in red. Then we start to see the reversal coming in. I haven't got the trend dots on here, but I'm sure if I did have, they would have already changed color and start to be pulling away here. Now it's confirmed with the trend monitor. We're moving up. See, this level here is literally being tested as I'm talking. It's a pretty strong level, certainly stronger than the level above here. This is 2. This is stronger because it's thicker. If it's tested and hold, then it becomes stronger still. We've gone through a level here that was acting as resistance, is now potential support. That's listed level here. You can see it better over on the left-hand side here. But it's this one that's now key. This one is also coming into play. Now we're seeing the volume point of control jump up. Why? Because the volume here is greater than the volume here where it was before. So we're in a congestion phase. We've got a volume point of control. We've got a ceiling of resistance built over here, which is acting as that. And below, we've got this floor. And it's one of the aspects of the volume point of control itself that when you have both indicators on the chart, you will find these terrific channels building, quite narrow, quite tight, the ceiling above, the floor below, and the VPOC in the middle. And when it breaks away from there, it's a great opportunity to jump in because you've got predefined areas already very clearly defined for you. As just pull that up there, very clearly defined. You've got a similar thing over here on the 3 minutes. See, exactly the same sort of principle. What you find is because by virtue of the fact that the price action is in congestion around the volume point of control, because that by nature is what it's describing, it is the heaviest area of volume on the chart. It is where you expect congestion to build because it's an important area. Equally, when you get low volume nodes like this, you expect the price action to move through very swiftly. But this is what you tend to get a lot of the time. And once you've got that, then it gives you very clear levels for placement of stop loss, for managing trades, and so on and so forth. They are just 2 indicators which are extremely powerful when used in combination because they kind of mirror one another in the sense that both are looking for areas which have been repeatedly hit. And one of those key areas is obviously at the volume point of control where there is congestion. Go down onto the 5 minute. Here we don't have a floor as such, we just have a ceiling. So we've got the volume point of control. We've got the ceiling, what was the ceiling of resistance, very strong, capped off a lot of this price action over here, held it down, forced it lower, and we broke away from there. Now we're trying to have this sort of mini rally come into effect, but the sentiment still remains bearish for the time being. But if you're up on the 15-second, you may well have taken a trade to the upside. And the similar principle applies to the tick charts. We'll go on to the tick charts. I know it says tick chart currencies, but it is actually tick charts. I've got the NQ here. And what the tick speedometer does over here on the left-hand side, these are set pretty quick. These are on 15-second, this is 30-second, and this is a minute. And what I've done, you've got the equivalent tick speed over here. So we're pulling the tick speed off here. So I've got to just change these over, just change those over very quickly. 144, that's 377, 6, and that's 987, so just change that back to 610, there we go. And the beauty of a tick chart is you get momentum. When you get that rapid move that you're literally seeing there as I was talking, that's the sort of momentum that you get in a tick chart, which you don't tend to see in a time-based chart, because the 1 minute time chart, for example, will close after 1 minute. That's what it's designed to do. The tick chart here will close after 144 ticks have gone through the market. Now, whether that happens in half a second, a millisecond, a nanosecond, whatever, that is the metric that governs it. So if you put volume on here, all you get is a line of soldiers, because they're all 144 tick. If you're using tick as the volume metric, you might be using on TradeStation, for example. We have the physical orders there as well. But what you see on tick charts is you see this momentum, but the indicators work in exactly the same way. I've got the trend dots on here. Let's just pop this up full size. There we go. Nice move to the downside. The trend monitor keeps you in bright red. We're now starting to see a transition. Why? Because the trend dots have changed. They've changed to blue. They've also moved to the underside. We've got some levels coming in and out all the time. We've got the volume point of control. Where is this going back to? Probably back up here if it gets that far. At that point, we expect more of this behavior. So we're expecting more congestion. So in terms of taking that particular trade, very quick, in and out. You know, it's rising up here. If it's going to get there, yes, it'll get here, but then it's going to congest. Maybe for a minute. We're on 144 ticks here, so this is pretty quick. I'll just see what happens. But you can see the trend dots here underneath. That's where you want to see them, pushing up, pushing up, pushing up, helping to keep you in. Trend monitor's transition now, but look how far behind the trend monitor is. The trend dots change first, come through here into blue, but the trend monitor itself doesn't confirm that for a little while. And that's how they're designed. They're designed to work in perfect harmony with one another. This works close to the market. This steps away and works a little bit further back. So you have two indications of change in trend and confirmation of change in trend, either through the trend dots, which are extremely close to the price action. You can see here as we get into this congestion phase, they start to move into the body of the candle. And if it reverses again, they'll roll over and they'll appear at the top. That's just the way they work. So they're either at the bottom pushing up, as they are here. This one closed up, so it's underneath. So it's pushing up, pushing up, pushing up, trying to push away from there. Another one underneath, pushing up. The trend monitor supporting all the time. Now we're coming up to the volume here is falling away, which is great because volume from a resistance perspective it works in exactly the same way as price. It's either going to help or hinder. And in this case, it's going to help because it's falling away. So we've got less volume acting as potential resistance. We have a little bit of price resistance coming in. It was hit there. Looks as though it's going to close above that. Then obviously it acts as support in that case. Trend dots here, you can see still pushing higher, pushing higher, pushing higher. Trend monitor hasn't flickered. You wouldn't expect any changes here. Okay, now we've got a little bit of this little resistance area is proving to be a little bit stronger than we first anticipated. Becoming stronger still because there's another failure. See if we get a clearance through there. And if we get a clearance through there, then through here should be a piece of cake. Only 2 points, I appreciate it. It's on the NQ, but you know, some traders only look for 3-4 points on the NQ. Okay, it still looks a little bit hesitant. We've got a wick to the upper body, wick to the upper body. Haven't got any volume on here. Obviously, I'm doing this without volume. This is just priced using the indicators, VPOC, trend monitor, support and resistance on the accumulation distribution. Now we're coming up to low volume area. Should be okay. Okay, let's drop that out of the way. It's going to have a look at a slower one. 377. That's now increased speed. That's up at 610. So we'll just change that over to 610 tick. There we go. This is the speed you have to work at. Right, where are we going with this one? Well, we've had the rally, but we topped out here before. So it's giving us a clue that possibly we might see a top out again. We've got this resistance area here. This is pretty strong. This is 2 levels. You may not be able to see it, but it actually just flicked slightly there. But this is a cluster of 2. And when you get 2 levels like that acting in concert, that is making that much stronger. It's why it capped off there, and it's why it's really struggling here. So now we're into an area where we've got price becoming important to us in terms of the accumulation distribution indicator. It's acting as a ceiling of resistance. It's capping it off all the time. It capped it here. It's going to cap it off here, looks like. Never got anywhere near the VPOC. But the principles of trading on tick charts exactly the same. You're using multiple charts here in exactly the same way as you would with, you've got another level here, you can see, as you would, that's the same one. Just see if it's, we've increased it. No, we're still at 610, 610, 233. And what the tick speedometer does, it delivers the optimal setting for your tick chart, whatever the instrument is, whether you're trading on, this has now dropped again, you can see 3777 tick. So we drop down again. And what it also displays is the activity that's going on. We want to be trading primarily in orange and green. We don't want to be in these red areas, because what red signals to us is a lack of participation. In other words, low volume areas, or low volume in with regard to, these are time-based, remember. So we can look at this for VPA. We can also look at these up here. These are different time frames. This is 1, 2, and 3 minutes. Then remember, this down here is 15, 30, and a minute down here. But essentially, you're looking at all these signals for volume price analysis confirmation. You're taking the tick speed off these tick speedometer down here, so you're trading at the optimal setting. These have now increased again, so we'll go up again. So we're up to 610, and this one's now gone up to 987. And if I had the ES on here, we will be dealing with thousands of ticks. Sorry, let's just put that on there. We will be dealing with thousands of ticks and not simply in these levels here. Let's just go back onto the time-based charts. In fact, let's go back to the multiples, if I can. Sorry, let's go back to the. There we go. There we go. Back to where we were. This is where we started. This is what's going on. Pretty narrow. You know, this is pretty narrow too. It's all, you know, there or thereabouts. As I say, if you want to trade these sorts of markets, then you've got to trade them at speed, and you've got to trade them on things like the tick, or you move over to something like the Renko. Can't remember who I've got on here. I've got the YM here. Exactly the same principles. The YM is a non-time-based chart. It's perfect for intraday scalping. Just going to set these up. This is on 15 seconds, so let's just change this to 15 seconds. There we go. So we click on that, and it tells us that the optimal setting for trading the YM at this precise moment is 6. In other words, 6 points. So we are now trading at the perfect setting for the YM on an intraday basis. And remember, each of these bricks at 6 points is worth 30 bucks. So it's definitely worth having. Let's do the same for the 30 second. And it's what the Renko Optimizer was designed to do. We are trading at 8. So these are worth 40. And finally over onto the 1 minute, not the 1 second, although you can have the 1 second. And these are trading at 13. I'll leave you to do the maths on that one yourself. So there we are. Really, really nice way to trade this move. It's not stressful. You've got the VPA below here on the equivalent time frame settings. You've got all the indicators. You've got support and resistance. You've got the volume point of control. You've got accumulation distribution on the Renko. You've got the trend monitor below. You've got the trend dots above. And this is what I meant. The trend dots are just keeping you in. There's no stress involved with this particular trade. It's very straightforward. You know, nothing to stress you out. The trend monitor went from red. We'll look at the trend dots. Initially, they're red, then they start to go into blue, off we go, up we go, and then the trend monitor follows along behind. Because what the trend monitor is doing is basically looking at it and saying, is this actually a change in trend from a primary to a primary, in other words, from a bearish to bullish or bullish to bearish, or is it simply a pause point? If it's simply a pause point, it will try and tell you that through these colors. They will go into darker red or darker blue. But ultimately, if it does confirm the trend that the trend dots are giving you, then that is what it's telling you. And it's the same here. And if you use it in this multiple way, it's immensely powerful. I cannot tell you how powerful this approach is. It's as simple as that. But it's premised on exactly the same principles of volume price analysis. You're looking at the volume below here. You're looking at what's going on. You've got all your indicators arranged here. And you've got the trend monitor, the trend dots, the accumulation distribution, you've got the volume point of control, and I've even got the CSI over here on the left-hand side, which is telling me right now on 3 minute at any rate, there's been a decent amount of yen selling. So the yen is selling off, good news. I've got the dollar index over on, I've got trading view up, so I've got the dollar index over there. That's trading at 90.56 at the moment. So that's come off from 90.70 a little while ago when we started. So that's good news for equities. So that's helping, and the VIX as well. So you put it all together in that way, and it's finding what works for you, what you're comfortable with, and the approach, the style of trading approach that is going to suit you as an individual, not me, not Anna, but you as an individual. And as Anna said this morning in the Forex trading room, it's all down to psychology, which is why we bang on about psychology in the Forex education program, because if you understand yourself, understand your strengths, understand your weaknesses, you can manage your weaknesses, play to your strengths, and find out what is going to work for you, not what's going to work for me or Anna, what's going to work for you in terms of trading, what you're comfortable with. You may be very comfortable trading at this sort of speed, you may not. If you're not, step back from it. You know, it's not, there is no right way to trade these markets. Anyone who says this has to be my way or the highway is a fool, in my opinion. I'm sorry, but that's the long and short of it. It's as simple as that. You take what elements we have a lot of traders, we have a lot of customers who've taken parts of what we teach, what we explain, part of the software maybe, and they make it their own. We have someone in the, I mentioned this morning, we have someone in the education program. We use candlesticks. He doesn't, he uses bars. Perfectly fine with us. We're not going to say, look, you have to use candlesticks. Perfectly fine. Find what works for you. There we go. I'm going to pause it there. Just a quick whiz round. I can't remember what I've got up here. Here we go. This is the Forex education program. I know we've got 1 or 2 students here today, so warm welcome to you. It's a complete program. We bolted in the funding in the last few weeks. So when you join the Forex program, and I have to say, we also have quite a lot of stock traders in there, because whilst it is obviously focused towards Forex, a lot of that information is common to any market you care to trade. And we've now bolted on the funding for the Forex, which takes you from a $5,000 account, evaluation of $5,000, $10,000 or $15,000 account, right the way through to 2 million. It's our money, no risk to you. You're not trading your money, you're trading our money. There is an evaluation period, purely because we want to assess you. We want to make sure you can be consistent with a small account, because if you can be consistent with a small account, the world's your oyster, because you just leverage you up all the time and you move up to larger, and also learn how to manage larger accounts within a conservative rule set, I have to say. You'll find all the indicators over here at quantumtrading.com, MT45, NinjaTrader 78, and TradingView. TradeStation will be launched before Christmas, and thereafter we're going to be dropping back onto TradingView, pull across all the indicators that are missing there, support and resistance, the VPOC and the Forex specific ones. So that will be a complete package, pretty much aligned with the MT45, and also the price will go up as well. If you have the full package of TradingView indicators already, good news for you, because you'll get all the other indicators free of charge, which is a pretty good deal, I have to say. Because once they've been released, then the price will go up to reflect the same as MT45. Once we've done that, we've got a whole bunch of things to do. We will be moving some of the upgrades that we've done over onto some of the other platforms. We've also got 2 new indicators that we're working on. One of them is a big indicator, which I'm not going to say too much about, but that is in the pipeline. That's pretty much it. You'll find Anna over at annacooling.com. All the books are there, up on Amazon. I have to say, we're very proud to say that this one has now been adopted by a Vietnamese publisher, and as has this one, in fact. And these 2 have also been taken up by China and Japan, and they are out in print already. We got the advanced copies over in the last couple of weeks. So there's quite a few books in the Far East, in China, Japan, Vietnam, and Taiwan as well, where you will find these. And we'd love to, if you know of anyone in Europe who is a publisher, we would love to talk to them as well. So that's it. Thank you very much indeed. We really appreciate you coming along to these sessions, as Anna said. And all that's left to me to say is to wish you a happy and peaceful Christmas and a prosperous New Year. Enjoy the rest of the trading year, what's left of it. And we will see you in the new year. If you, there will be new series coming out. There will be a TradeStation specific series as well. If you've registered on Anna's site, you will get all the details automatically. So if you're, by virtue of being here, I'm sure you are all registered anyway. But if you've got any problems or you don't get the links in the new year, I don't know when they'll be coming out. We're going to take a break for sort of probably 3 or 4 weeks. But you will get them, rest assured. If you need us or want to talk to us, have any issues you want to raise with that, just anna@annacooling.com, or you can get hold of me at david@quantumtrading.com. So that's it. Thank you very much indeed for coming along. We do appreciate it. Hope you've enjoyed it today. Hope you've learned something perhaps you didn't know before. And we will see you in the new year. So thank you so much, and bye for now.